I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver company specializing in strategies. And on today's edition of Coffee with Lynette, I have a very special guest, definitely one of my tippy-top favorites, Egon von Greyerz. Thank you for coming on, Egon. He started Matterhorn Asset Management back in 1999 as a private investment company for high net worth individuals, pension funds, etc. All are based on wealth preservation principles, which could not be more significant than it is today and right now. He is definitely an educator, a prolific writer with some fabulous work out there. So, I would imagine everybody knows you, Egon, but if not, you have all of the links to go and see his work, read his work. So thank you so much for being here today.
It's a real pleasure always to speak to you, Lynette, and even more so today because every time it gets better and more interesting for both of us. And you know, we have so much that we want to tell the world about and educate the world about and help people to actually preserve their wealth and therefore their happiness.
Let's talk about all of the distractions that the governments and the central banks, are using. Would you like to make a comment on that, or I do have another question regarding that? And the central banks.
Go ahead. Yeah.
Okay, well, I think this is like a huge distraction, and I don't think it's new information necessarily, but all of the comments and all of the news that are coming out now about the Fed, those that make all the decisions, the FOMC board, and all of the trading and how much money they've made when they can manipulate and manage the markets. Do you think that's a form of distraction, or do you think that they intended for that to get out, or, what do you think about that?
Well, you and I have talked about for a long time now how we live in a fake world, and where most of the actions as well as the statements are manufactured in a way to distract us. That there are, there are no real values in markets, as we know. The actions of central banks are really totally ruining the financial system by creating money and creating assets and creating false statements that benefit a few and that gives the masses enormous debt that they are not even aware of. So we are now in a state where the rich are extremely happy because all the actions of central banks are benefiting the wealthy and the bankers. And stock investors, and the poor, they think also they're fine because they don't realize that they're actually now getting more and more debt every day, not their own personal debt only, because that's nothing compared to the debt of the country where they live. But nobody's aware of that, and nobody is aware of the fact that the piper has to be paid. And that's what we're going to see in the next few years. And of course, the whole system is now built on distorting these facts. Nobody tells you the truth. Nobody tells you the truth about the economic situation. Nobody tells you the truth about the debt. Nobody tells you the truth about the vaccines and the effect of vaccines, etc. Either. And that is really the story throughout now most people's lives today, that nobody is aware of what is happening because this propaganda is greater than any time in history, and people don't see that propaganda. Even the fact, even here in Switzerland now, you go in like you have in the US, you go into a restaurant and they ask for your papers. And I
That
spoke.
scares the crap out of me.
Yeah.
If you want to know
Yeah,
the
no,
truth.
totally. I agree with you. And it's unpleasant. Can we see your vaccination? Can we see your ID? Can we see your. And, that's to go into a restaurant. And that's even in Switzerland, which I actually never expected that the Swiss parliament would approve this a vaccination requirement to go into a restaurant. I'm also Swedish. So I spent time in Sweden, and there are no requirements whatsoever. You can go into restaurants. There are no lockdowns. Nobody wears masks anywhere in Sweden. I was there. A big part of the summer was based there. Never wore a mask anywhere, in department stores or restaurants or anywhere. So but that's an exception. Interestingly enough, of course, Sweden has actually have a lower frequency of COVID and less deaths than most other countries. So there's no correlation between the actions governments are taking, like in Australia, and what happens to the casualty rates, etc. Okay, I know this is a sensitive, politically sensitive area, and we're not supposed to touch on that. But I'm really mentioning that as again another signal of this. It's a total censorship, really.
Isn't
Now,
it though? It is.
So yeah, but coming back to your base question now, it's very hard for people to actually navigate through this jungle of fake news on a daily basis. And nobody understands the financial or economic situation the world is in either. Nobody understands what's going to hit us all, and that's really what you and I are trying to do to educate the very, very few at this point. We have both a lot of people we talk to, but relatively that is the 0.5% of world financial assets that listen to us. They're the same 0.5% that hold gold.
Right.
I'm saddened by all of this, but we can't be victims. We have to do what we can do. We have to help the people who want to be helped and educate the people that need to be educated. And the rest, people will discover it sooner or later, and probably sooner.
Yeah, unfortunately. I mean, it's hard to predict the exact moment that it'll get recognized, but I'm really kind of wondering, there's an issue that's coming up with social unrest. So, because really, the whole system was designed to create this bifurcation in wealth and in income. I mean, so for them to talk about fighting that now, when they're doing everything they can to exacerbate that, is really ridiculous. But what do you think the risk is of broad-scale social unrest?
Well, I'm very clear about that, Lynette, Lynette, and I've been talking about it for years and years, that it's inevitable, in my view. We are now in a period where, as I said, the masses are really poor, but they're not aware of it because nobody tells them there's a debt here that you need to pay, and instead the central banks are continuing their false actions by pretending they're making everybody rich, by printing money to cover everything. America, nobody understands. In the US, you're printing half of the budget outlays. You're printing half of that, making money out of nothing, out of thin air. And then that goes then to pay for all the expenses that the country is wasting. Half of the budget, that's just unbelievable, has to be printed or borrowed. So at this point, people are not aware, and the money temporarily, and temporarily is for us is a very long time. It's taken a long time for currencies to reflect this, and for the value of money to reflect this. We see it, you and I, who measured against gold, and of course gold since 2000 is up, or the dollar is down since 2000, 85% against gold. So that's the real purchasing power of the dollar, and since 71 is down 98%. Nobody sees that because most Americans, for example, anyway, they don't have a passport, or a very high percentage doesn't have a passport. So therefore, nobody sees that they're actually getting poorer by the day. I mean, I said in an article recently that the Swiss the Swiss traveling to America, I mean, for them it's 80% cheaper than it was in 1971 because of the dollar having weakened by that extent to the Swiss franc. And of course, for the Americans coming to Switzerland, it's the other way around. You know, the dollar is worth 80% less. Nobody sees that. But I think coming back to the social unrest, the real problems will arise when the currency starts collapsing, inflation goes up. I mean, I'm 100% certain that we will have very high inflation and probably hyperinflation. And no, we are seeing all the signals today of that everywhere in society. That it's everywhere where you go, there are shortages of goods, raw materials are going up, and you know, everything, every shop you go into, the prices are higher or the quantities are lower. So that is and food prices are going to rise dramatically.
Exactly. And they already are.
So,
all
yes,
prices are. I mean, do you think that we could possibly be in the beginning stages of a hyperinflationary event with the spike? I mean, do you think they're going to be able to get the inflation rate under control?
No, definitely not. I mean, they will try, of course, but you know, I'm just getting to the point first. I was saying that this food inflation and this price inflation, which is now going to escalate, you know, of course they will do all the tricks in the books will be there. They will create. That's not going to happen overnight, but in the next 2-3 years, maybe digital money. They'll put the old debt in a separate basket and say we don't need to repay that. This is the new dollar now, the digital dollar, etc. But all of that will be fake, of course, and all of that's just another form of fiat money. They'll be worthless. So even if whatever actions they take could last a very brief period of time when people think now it's okay, but it's the same old tricks, just you know, the different disguise, and therefore the currency, whatever it is, the old currency, the old dollar or the new dollar will collapse, and people will not be able to afford their daily living, which is the food and the rent, etc. And this is, you know, coming back to social unrest. So it's when you have empty stomachs, that's when you start seeing real social unrest. You know, whatever we've seen now, it has come and gone. Nothing has lasted. Whether it's, you know, we've seen the major protests in America, we've seen the yellow vests in France, etc., and in all countries similar things. But that hasn't lasted because we're not seeing empty stomachs. And I think that to me will be the real signal when there's not enough food for people. As you said, there are already shortages today, and the prices are going up. But this is just the beginning. Now, you know, timing is impossible to forecast. That's one thing I've learned. You know, you got to be patient here, because the fact that we are seeing something today, or we saw something 5 years ago, 10 years ago, it doesn't, you know, in history afterwards, everybody will say, of course it had to happen. But when we're right in the middle of it, it seems to take a very long time, because my view is that we're at the end of a very long cycle. It could be a 2,000-year cycle even. And again, only future historians will tell us about that. that means that a cycle doesn't die overnight, and we've seen. I mean, basically, we've had 100 years of it slowly dying, with currencies collapsing dramatically over that period, and in particular over the last 50 years. So we're going to go through the next phase of that, and whether that starts tomorrow or in 2 years' time, I don't know. What you do know is once inflation starts and hyperinflation starts, it goes very, very quickly.
Yes, it does.
It all happens within a couple of years, basically. Of course, I lived in the UK in the 70s, and I saw an average of 15-17% inflation over 7-8 years. I saw it happening. I saw the prices going up. I saw the people suffering, and of course, at the same time, it always happens. Energy prices went up dramatically, or the oil went up from a few dollars first to $20, and then to $40. And now, again, the world survived because at the same time, of course, the dollar has just gone off the gold backing, and therefore all currencies in the world. So therefore, that's, as we know, when the real trouble started for the world, because this is when the money printing started in earnest, and we now been through. And I've been, I was there. My working life started in '69, so I've seen and remember gold at $35, even during my working life, and I've seen it all happen. I've seen the currencies totally collapsing, not all at the same time. There were some faster than others. I remember how the pound totally collapsed. But they will be leapfrogging each other. But the race to the bottom, that is set, as we said, because those currencies have gone down in the last 50 years by 97 to 99%. The final couple of percent is going to happen now, but the final 2% or so is 100% from here, and that's what people don't realize. And that's when we will get the hyperinflation, whether it starts, as I said, tomorrow or in a couple of years' time. Makes no difference. What we are looking at, and this is what you and I try to explain to people, what we're looking at here is buying insurance, protecting your assets for, we don't think it's an eventuality. We think it's a certainty that we will have real problems and very high inflation, hyperinflation, maybe collapse of the financial system. And, we don't, if we are prepared then to take the stance that this is a long-term insurance, we don't have to worry about the value of the dollar or the value of gold today or tomorrow. Look at the price. We don't even have to worry about timing it. If we buy it today or it's going to be lower tomorrow, it's totally irrelevant when all this starts unraveling. And that's really how people should look at it. Just buy your protection and then enjoy life. I mean, that's how we look at it.
Oh, absolutely. I mean, I can sleep. I don't have to worry about the price fluctuations because I know those aren't real either. It goes back to a distraction. Stay away from gold. But you made a comment that's really interesting, and I'd like to go back to that. And that was when they come out with, and this is obviously not verbatim, but when they come out with the new CBDCs, the central bank digital currencies, they'll take the old debt and they'll put it in a basket, and you think they'll say, well, we don't have to pay that because now we have a new currency. Could you talk about that more? Because that's really an interesting concept to me.
Yes, of course, they have to continue the trickery here. And the thing is that you can't make debt disappear. You can pretend that you put it aside and that's old debt and old money. That's, we don't have to worry about that. We don't have to repay that because we have a new currency now. But what they disregard when they do that is that all of that debt has been used to finance hundreds of trillions of assets.
Fiat
and
assets, intangibles particularly. Well, real estate
yeah,
too. No, you're
stock
right.
markets,
Mm-hmm.
property market, bond markets. And if you say that, you don't have to worry about the debt, because that also means that, of course, you realize that the debt is totally worthless. And if the debt that has been used to inflate all of these assets that we've been talking about, then the assets will also be near to worthless.
Mm-hmm.
And therefore, the world would realize if you used fake money to buy assets at a massively inflated price, that inflated price will also go down to virtually zero, which means that in the next X years, whether that's 5 years or a bit longer, 10 years, in my view, property, stock market, etc., we lose 90% or more against gold.
Mm-hmm.
Because gold so far has not reflected the massive bubble that we're seeing in other assets.
Mm-hmm.
And therefore, gold is now, and I show that several times in the graph that I repeat many times, this is gold in relation to US money supply.
Right.
And gold in relation to US money supply is today as cheap as it was in 71 when gold was $35,
Mm-hmm.
or in 2000 when gold was $300. And nobody, and we are as cheap as that today. And nobody realizes that gold is now unloved and undervalued to an extent that, as I said in one article, is dirt cheap. It's absolutely so. The people who haven't protected themselves now is really the time to do it, and it's not too late at all, because that gold is going to start reflecting what's going to happen to other assets, or the other way around. The other assets are going to come down dramatically in relation to gold. I'm not like you. I'm not a gold bug, really. I'm just
Right.
someone who just analyzes risk and looks. And we went into gold not because we're gold bugs, just because we saw that as the best instrument to protect against what we see happening in the world economy in coming years.
Exactly, because you're all about wealth preservation. I mean,
Yeah.
right? That's your mission. And
Yeah.
what I also think is really interesting is when we talk about gold, we're most people are referring to the nominal spot price, which is a contract price, right? Can you just kind of expand on that a bit?
Yes, I definitely can. Now, the gold price is not the same as the price of gold.
Exactly.
Uh, you know, the gold price that you see on the screen is a paper price that has nothing to do with the real price of gold or the value of gold. Sadly, you're dealing here with an instrument where 95% of the daily turnover is in paper.
Mm-hmm.
And therefore, the price determination and price discovery is non-existent. This price we're seeing in gold has nothing to do with a real market. So when we are seeing gold coming down, and we've seen enough of these corrections over the last few years,
Even
when we
over the
see it coming
last few
down,
weeks.
and yeah, absolutely. Every time it reaches a level, they hit it straight away.
Mm-hmm.
And that's, and of course, we, like you, we're not seeing any sellers in the physical market. The physical market is not selling.
Right.
It's just the paper market where they're speculating and manipulating the gold price. And therefore, the people who actually understand the role of gold and the role of physical gold, they don't worry about the price on a daily basis. It's so easy. We can go back 5,000 years. We can go back 2,000 years. We can go back 100 years. And it's all the same. Gold is not an exciting investment, but it's not a Bitcoin. gold is just the only money that has survived in history, and the only money that reflects stable purchasing power.
Right.
And as we know, that an ounce of gold has bought the same the suit for a man or any cereal, or it's been, the price has been the same for thousands of years, measured in gold. So that all gold does. I wrote in an article recently, don't buy gold if the government, if there are government surpluses, and if government debt and private debt doesn't go up more than inflation, and if there is sound monetary policy and no money printing, and of course, if inflation is zero or virtually zero. Remember that even at 2% inflation, which is a ridiculous target that many countries have, US, Europe, many European
No, now they're all
2%
going
inflation.
to an average.
Yeah. I mean, that means that prices double every 36 years.
Yeah.
2% inflation.
If they actually hit that.
And is that desirable? And we know inflation is much bigger than that. So if all of those conditions are met, you shouldn't own gold. But right now it's the opposite. Debt is absolutely going up exponentially. Deficits, as we said, U.S. deficit, half of the budget spending is actually a deficit. And interest rates are manipulated low. And bond prices are massive, and it's all because of this manipulation. You haven't got any of the conditions here that would satisfy not owning gold. On the contrary, you have all the conditions that will make gold absolutely go crazy at some point. But we're not buying it for that. We're buying it to protect what we have. We're not worried about if gold. I always say, don't wish gold to go to 10,000, 100,000, 100 million, or 100 trillion like in the Weimar Republic, because if it does, life is not going to be as pleasant as it is now. Yeah. So don't wish for it, but be prepared that it could, and therefore you should be protected. And that's really what we are looking at here. Don't look at gold as an investment that you want to go up. Just as pure protection against a totally sick monetary and financial system.
Well, I'd like to ask you, because I never hear anybody talk about this, except I talk about it. Why has gold never gone to zero in 5,000 years?
Yes, well, it's very simple. Gold at a very early stage became money, and of course it is also an asset. You actually have to do some work to extract it out of the ground. There's scarcity also, of course. And in order for money to have a value. Sorry?
Real scarcity.
Yeah, real scarcity.
Instead of manipulated scarcity, actual real scarcity.
Therefore, so if if to give an asset or like money an intrinsic value, but there has to be scarcity, because if now like normal money, fiat money, you whatever you need, you print it. You need more money for weapons. You need more money for food. You need more money for budget deficits. That's printed. And of course, anything that's fabricated out of nothing is worth nothing. And I mean, that's a point that I make over and over again, and you too, that you don't think that this money is worth anything. It's just an illusion. People can live under illusions for quite a long time, and the world has.
A lifetime, really.
Yeah. But that illusion will sometime, and not too far away, disappear, and it will just be gone. And that means that the values that illusion represents will also be gone. And therefore, it's very simple. You take, I wrote in a recent article about, for example, the soldiers. I you take the soldiers in empires like the Roman empires. Soldiers are always paid in gold, and there was an emperor around 100 and something AD, Septimus, and he said to his sons, "Pay your soldiers in gold and nothing else, and don't worry about the others." So you pay yourself, because he knew that if you want to have the soldiers loyal, you got to pay them in real money, and even soldiers in those days understood that was the only real money, not debt instruments or not promises of future payment. And if they didn't get their gold, they walked away. The soldiers, I mean, they were bought anyway. I mean, there wasn't a conscripted army most of the time. They were bought. So, that's why there's a history that makes gold. The combination of the scarcity and the fact that, as I said, you have to do some work to get it out of the ground and make it look like gold. But then it's history and tradition that has actually made gold to what it is, and that's so fascinating. And there's nothing that can replace 5,000 years of history when it comes to money. And you compare this, every single currency that has ever been created except for gold has gone to zero. Every single currency,
without exception.
And that's so simple, but and it's not different today. Bitcoin might go to 100,000 or 1 million or whatever it is. But Bitcoin might be fantastic speculation, and it has been for a lot of people already, but it doesn't have the history yet where we can rely on it as future money. And I'm sure that it'll be replaced, if it survives, it'll be replaced while a lot of other things in the digital form in coming years. And I certainly, I wouldn't want to use my computer when there is a crisis and there is no electricity. I wouldn't like to go with my telephone and pay something when actually, nobody is interested in getting paid. And you might not even have electricity to actually pay the amount in question. So I certainly, in emergency, you stick to what you understand and what has a real value. Not to digital entry on a computer that could be anywhere in the world.
Right. But the other thing that I look at when I think about gold is its utility, not just as money, though that is, the strong foundation why all the central banks are accumulating it, but also its utility that they've never been able to duplicate in a lab. So, you can stretch it out and do all of these wires. So it's used in electronic, it's used in medicine, it's used in jewelry. It's just used across the entire spectrum.
Yes.
So,
yes.
Therefore, for me, when I look at that, I say, well, it's got the broadest base of buyer. Therefore, what do you want in a crisis? Something that is only utilized in one area, or something that has the broadest base of buyer?
No, absolutely true. Although, of course, most of the gold today becomes investment gold that is being made, as opposed to silver, of course, where the most of it is industrial.
Right.
And the demand, as we all both know, for silver, with all the electronics and of course solar panels, etc., electric cars, and that's massive and it's going to increase dramatically. And there is already now major shortages of silver. So silver will be an interesting investment. I would say secondary to gold, because I wouldn't. Silver, I think, will go up a lot more than gold, but we always tell people just hold a lot less silver than gold because of the volatility. If you want to sleep well at night, it's exciting when it goes up, but it's horrible when it goes down. And when it moves, silver, it moves twice as fast up or 3 times as fast up as gold, and it goes down at the same speed. So in relation to gold. So therefore, it's not for normal investors to sit and hold it, but just their wealth preservation asset in silver, in my view. It should be. much smaller part than in gold.
I think of silver as my barterable position and gold as my wealth preservation position.
Yeah.
And I've done a study, which I think we're going to republish, aren't we? On what happens to gold and silver historically during currency resets, which is significant. So people look at the gold silver ratio and they go, oh, well, silver's a lot cheaper and it's going to go up a whole lot more. But if silver gets to $10,000 an ounce, what are you going to do? Convert it into fiat? It has no value. And actually, that's not what happens. Gold always outperforms, or historically has always outperformed during a currency reset. Because that's what they reset the currency against. And it is.
That's exactly right. And that happened also in the Weimar Republic, for example. The gold silver ratio went, I think it went up to over 200. It went up dramatically. So then it was all gold for a certain period. And that's absolutely correct. So the way I look at silver is, if the gold silver ratio goes down from the 70s down to 30 or 15 or 20, where it's been historically, I think I would get out of my silver much earlier and switch it into gold, because, as you say, when there's a real crisis, gold will go up a lot more than silver.
Right. Plus, when you're talking about the assets and how they're overvalued now and they're likely to drop 90%, and of course we also have to see who and what is going to survive this mess. That's really where you have the opportunity with gold to convert into those other assets once you know they're going to survive.
Yes, absolutely. No, I mean, this is what we said to our investors, that at some point that gold, you're not going to sit on the gold forever. You will have a core position, but at some point you will turn your gold into income producing assets. Exactly. Whether that is bonds in a restructured world yielding 20%, like in 1980, you could actually, when gold was 850 and bond rates were approaching 15 to 20%, depending on the country, then of course it's a wonderful time to switch then, and the same with if property values collapse and you buy rental income properties, good quality ones, etc. So there'll be so many opportunities for the people who have the liquidity and the cash.
Exactly.
And that will be very exciting for the ones who have excess cash. Some people might need it just for survival, and that's the number one criterion for, of course, wealth preservation. First of all, you need to survive, and then you're looking at alternative use of your money.
Exactly. That's kind of why I went and developed the mantra, which is, you haven't been here yet, but hopefully that'll happen at some point. But it's food, water, energy security, barterability, wealth preservation, community, and shelter, because that's what we need to survive this mess. We need to be as independent as possible. And the gold, for me, silver is about barterability, because how much silver would you need to buy a piece of property versus, the same value in terms of gold? It's just easier to hold more wealth in a much smaller package, and therefore have the ability to buy those assets when they're really cheap.
Yeah, no, that's first of all, we need to survive, and secondly, there'll be those opportunities will be. I mean, that will be an opportunity not just in a lifetime, in generations. The way asset prices, because as we said before, if we've been printing, just global debt, just between turn of the century and today, global debt has gone from 100 trillion to 300 trillion. It's trebled. And that's what pushed asset prices up. Mm-hmm. It's just manufactured and borrowed money that's inflated asset prices. They're not worth more, all of these assets. Not at all. It's just the money is worth less, and therefore you need more of the money. And then you think that because You need more of the money to pay for the assets. You think the assets are worth more, but they're not. You're just buying it with fake money. When things really start happening, that will have zero value. That's what I said. These assets are going to come down dramatically in price.
Well,
Nobody believes that, of course.
I know, isn't that funny?
Yeah, that's it. But
But
it's always different today. Everybody thinks because I live today is different. But
right,
if you study history, it isn't. It's exactly
isn't.
the same.
Yep.
The financial markets, I mean, they were sophisticated several hundred years ago. They were when you looked at the tulipomania in Holland in the 1600s, you had futures markets, you had options markets
Right.
even then. So
Right.
in tulip bulbs, so there's no difference, but people think that it's all different today because of computers, etc. But it isn't.
No.
The fundamentals are still the same. It's just that they're different. They call it different things, but all markets over time always act predictably.
Yes, they do.
Since we have unlimited records of currencies collapsing, since every single currency that's ever existed has collapsed. But you don't hear a central bank chief talk about that, do you? You don't hear Powell.
Oh, no. Well, I wanted to ask you, though, going back to the debt, with all of that global debt, and I mean, this is not well, I guess relatively speaking, it is a large rise in interest rates. The Fed will, and actually global central bankers are trying to manage both the long and short. But what do you think the rise in interest rates, or at what level rise in interest rates do you think will completely explode this debt bomb that they've created? I guess I'm asking you, do you think they're going to lose control?
Yes, of course, they are going to lose control because you're now looking at mortgage rates in Europe, for example. In most countries, you can get 10-year money at sub 1% or 1%, for example. So that's so artificial. As I said, that's if money costs nothing, of course, it means that the asset you're buying, you can buy unlimited amounts of it, but it doesn't have the value that you believe that it has. And I think they're going to try to continue to control short-term rates, of course. But I think that the pressure will be coming from the long end of the bond market. And people will start dumping the long end, and especially take US debt. Foreigners will dump it. They already have, of course. The Russians have, the Chinese have reduced, even the Japanese have reduced a bit, not much. But all of these holders of US debt or any long-term debt, that's where the pressure will come. Of course, you will be as an investor, or as an institutional investor, you will be seen as totally irresponsible when inflation starts going up. If you hold on to these bonds that have had basically a 40-year bull market, and since 1980 or 81, and that now we got to the end of that, and we are now going to have a 40-year bear market in bonds, and rates going up to levels where the world will not be able to cope, and that is what will create, of course, a collapse in the system, because governments are not going. They initially, of course, continue to print unlimited amounts of money, but that's going to have no effect because what they print will have no value. The world will realize that, and anyway, the government, nobody can pay interest. People can not or hardly afford interest now at 1% or 0% for governments. And if it then goes to what level it starts hurt. I mean, I would say, if it went as high as 5%, I mean, nobody, Japan or the US and the EU, they wouldn't survive. and that's 5%. And as I often, and I think I've told you, I often say, you know, in 1974, I mean, I had my first UK mortgage I got in 73. In 74, I paid 21% on that mortgage.
Yeah.
And we survived. It was a bit tough, but we survived. You know, and today most people wouldn't be able to cope with a 2 or 3% mortgage.
Yeah, exactly.
Never mind a 10% one or so. So that's why you know, there is no chance that this system can survive, in my view. I'm absolutely 100% convinced, because when reality hits this system and markets start to correct to the values that they should be, and people start dumping debt and interest rates go up, all hell will break loose.
Feel like a domino effect. But the other thing that is kind of interesting, and I'll just throw it out here for you to think about. And, you know, part of the genius of the inflation system was that governments get to tax the inflated value as the dollar sinks, and therefore, you know, grow their tax revenues. And if people start to dump these assets, and let's assume that they bought them at a lower price, I mean, you think about the tax ramifications of that on top of the asset prices declining. I mean,
people won't pay their taxes, and people won't be able to afford to pay the taxes.
But if they're digital, won't they just pull them out of the accounts?
Well, they will obviously continue faking it and creating money that doesn't exist. And of course, in a hyperinflationary economy, that the one that stands nearest the printing press, benefits for a few minutes.
Exactly.
You take Zimbabwe, as an example.
Great example.
Mugabe, he was always nearest the press, so he got his money in local currency, and then he bought dollars or gold straight away. But as soon as the money got to the people, it was worthless.
Exactly.
Totally worthless. They didn't even want the money. It was just bartering, as you know. And gold was has been used a lot in Zimbabwe.
Oh yeah.
And that's what's going to happen now also. So it has value for a few minutes, and the government then prints the money and then hands it out. But once it's handed out, it's worth nothing. And we've seen that. By
the time they print the new bills, they have no value. They have to even go bigger, add more and more zeros.
Yeah.
But a zero times 10 trillion is still a zero.
Yeah. And this will all be digital, of course. People won't even see it. They won't see this big bill because it's all on the computer.
Right.
So therefore, nobody will see that the ridiculous loss of value in the money that they get. Like people haven't seen it now. Nobody understands that the money has lost almost 198% since 71. Nobody understands.
That's official. It's probably worse than that. That's the official rate. You know, that they tell you that it's lost. It's amazing.
I know, but still most people are not aware, of course.
Right.
People are totally unaware.
Right.
Yeah. So, I mean, I know sometimes you try to listen to yourself and I hate to come across as prophet of gloom and doom, but the main purpose of what you and I are doing is not telling people how terrible things will be. It's just warning people about the risks that we have and to protect themselves against that risk. And then we hope that we are totally wrong in our predictions, and it won't happen. I doubt that will be the case, but it doesn't matter. You just protect yourself and then live your life. And if nothing happens, you're protected. You don't have to worry.
Exactly. It's like the bug out house. Well, guess what? It's a great vacation house. And I hope I never really need to use it for the real reason why I bought it. And I would much rather have that than fiat. Fiat money.
Yeah, exactly. Yes. So, we're talking about insurance. It is insurance. When you buy fire insurance for your house, you don't hope that your house will burn down.
Right.
But you know that, and if it does, it's very good to have your insurance. And this is exactly the same we talk about. Now, I think because what has happened to gold and the price of gold in the last 20, 50 years, that is not reflecting, the price of gold is not reflecting the real value of gold. And I think that relatively gold will go up by more than inflation, much more than inflation,
Of course, yeah.
because there will be such an enormous physical shortage of gold. And if you want to cover even part of the paper gold, which is will be impossible.
Possible.
But on top of that, what people that I talked about before, and I have to come back to that, institutional investors, they have a responsibility to look after their stakeholders and protect part of the portfolio against inflation. And they are now starting. I mean, they take a long time to make decisions, and we've seen very few institutions buy physical gold. There's been maybe three, and stored outside the banking system. That'd be maybe a handful, not even that, in the world. But that's going to happen. So institutions are going to start buying gold, and now the average investment into gold, as you know, is 0.5% of world financial assets. So and if institutions went from 0.5% to 1%, there won't be enough gold in the world, of course, to satisfy that demand. And the only way it can be satisfied is by much higher prices.
Exactly.
If they want a ton of gold, and instead of paying $60 million for a ton of gold today, they pay they invest $60 million and they get half a ton or a quarter of a ton. That's what's going to happen. They'll invest the 60 million, but they will not get their ton. And that's what we're going to see. That the whole of the demand from the institutional side said they will never, of course, buy 10 or 20 or 30 or even more percent gold that many of our investors have. But as we said, just by increasing it by a fraction of a percent, the demand will be so great that will put additional pressure on the gold price, and on top of, as I said, the whole of the paper market having to be either covered with physical, which is probably going to bankrupt a lot of financial institutions.
Oh yeah.
Or there will be defaults, which is the same as bankruptcy.
It's exactly. Wow. I mean, we've covered a lot. There's more questions to ask you, but our time, I want to respect your time. And so is there anything else that you would like to say that we didn't get to talk about today that you think viewers need to know about?
Well, I always talk about, and I probably have many times with you also, and it might sound a bit repetitive, but
okay.
I really mean it. That remember that the real values in life that you should worry about. I'm sure you need a roof over your head and you need food, but then otherwise, the most important thing in life is family and friends. And then there are a lot of free things in life: books, nature, music, etc. And therefore, we have now had a long period of where life is based on the golden calf and a lot of material things. But I think it'll be wonderful again to get back to real values, even if it'll be in hard times. But very often in hard times, when people talk about war as something that when they all get together and they all actually help each other, etc. And this is going to be a type of war also. And the ones who have these strong ties with family, friends, etc., and who have other interests and values, they're the ones who are going to survive.
Yes.
There's no use being a victim here. You've got to look after yourself. There'll be no one else to look after you. There probably won't be any pensions. There won't be any bank savings. Your asset prices or values have gone down, and your debt is still outstanding. So therefore, think about, just don't focus on money. Just focus on other things that will actually make you survive and live with the difficult times that we're going to have.
I could not agree with you more. That's why, for me, community is key, and community is, the way that we're going to survive it. I remember my family talking about their time when they lived through the Depression and they lived in the ghetto, and there would be hobos that would come through on the trains, and then they would, jump off at Kingston, and my grandmother, I remember my mother saying this, she never turned a hungry person away. And they didn't have anything either. But what they had, they shared.
Yeah. Wonderful. Yeah, and that concept has totally disappeared in today's world, and it will come back. I'm certain.
Right.
The cycle will turn.
It hasn't totally disappeared. It hasn't totally. You and I are sitting here talking and sharing. It hasn't totally disappeared, and we're not the only ones, right?
No.
So there's still that little pilot light of community, and I think that can grow into a big flame. I hope it does. I hope it does, really.
Yeah. No, I agree with you. Yeah.
Thank you so much for coming on today. I know that everybody got a great deal out of it. The links to all of Egon's work are below, so just follow those links, read his work, and everybody else there that writes there, because you really have quite a talented team. And thank you for joining us. Until next we meet, please take care. Bye-bye.
Thank you, Lynette. Thank you very much.
Thank you, Egon.